All right. So this week, last week we did have earnings kickoff, but I think this week we have a heavier earnings schedule that's really going to get us into the earnings season. And if you don't know what earnings is pretty much when companies just have to report their quarterly earnings. And normally, a lot of people like to play on the earnings news. So if it's good, stocks normally go up. If it's bad, stocks normally go down. And I said normally because you can have some good news and the stock goes down, or you can have some bad news and the stock goes up. So you have to be careful with earnings. But that's the season that we're going into. And so first, let's look at the economic calendar. I want to make sure there's no random Jerome Powell speeches or any random Fed speeches. If you don't know about the Feds and Jerome Powell, they're pretty much giving us our readings on interest rates. Right now, we're in a cycle to where we're cutting interest rates. And we want to see how big of an interest rate cut we're going to get in November. So the interest rate cut that we got in September was a 0.5. A lot of people thought it would be a 0.25, but we're hoping for another 0.5 interest rate cut, but not quite sure on what we're going to get. So that's why it's important to pay attention to the other inflationary reports. And those reports help drive the market. So reports come out good, we get what we're expecting, the market goes up. Reports come out bad, and the Feds pull back on their cut cycle, or we get smaller cuts, then the market could be pulling back, consolidating, or moving down. All right, let me share my screen so we can look at this economic calendar. I haven't looked at it myself, so I don't know what we're walking into as far as news. All right, products, calendars, economic. All right, the week of the 21st through the 27th. All righty, so Monday, no major reports. And so when you see no scheduled reports, you have to remember that mine is set for only high importance. So if I turn it off, of course we have reports, but there's no high importance reports that are coming out on Monday, Tuesday, Wednesday, Thursday, or and Friday we have durable goods orders month over month. So it looks like this week should be normal. We don't see any Jerome Powell. We don't see any Feds or major Fed conferences or speeches. Like we do have a Fed speech on Monday, but this is not, again, if it's not Jerome Powell, I'm really not too worried. You do have other Feds, but Jerome Powell is the chairman of the Feds. So when Jerome Powell speaks, that's a time to play off of the volatility, regardless if you're day trading, playing options, swing trading, buying dips. It's just a good time for all if you can catch the wave and which way it's going. Tuesday, again, we do have more Fed speakers, but no Jerome Powell. Wednesday, so there are reports, but nothing too major. And then again, since we're worried about inflation and inflation reports, every Thursday, we do have initial jobless claims. Initial jobless claims helps the Feds get a gauge on inflation and helps them keep a temperature check on what they're going to do next. So 8:30 on Thursdays, 8:30 a.m. Eastern Standard. It's always good to check the jobless the jobless claims report numbers just to make sure everything is good, because sometimes you'll be in a trade the day before and the jobless claims report will come out and sink your trade. So that's one thing to pay attention to every Thursday at 8:30. And then let's see what else. So yeah, just looking at these minor reports, we do have Fed balance sheet, but again, I don't think there's. Yeah, okay, yep, we're good to go. Nothing major. Again, we do have earnings. So if you're into earnings, or you want to, search earnings, you can look at the earnings calendar. It's here right beside the economic calendar, and you can see all of the stocks. Have quite a few, all of the stocks that have earnings each day. And then if you see the sun, that means they have their earnings before the market opens. And if you see the crescent moon, then that means that's after the market closes. So that's good to know, so you don't get caught or stuck in anything before you can take profit or make your move. Do I have any questions? All righty, I'll take silence as a thumbs up. Let's keep moving. All right. So haven't done this in a while, but again, we do have some new faces here. So I just briefly wanted to go over the breakdown of the indicators really quick. And then later on, we can get into a lot of picks. A lot of the stocks that I'm looking at have really, really nice setups. I'm looking at, here we go. All right, so just to give you an idea of what we're going to be looking at. So the SPY is one stock, of course, that I'm always watching. If you're trading options or if you're trading, buying and selling shares, it's always good to check and see if the stock that you're trading is in the SPY, because you can use the SPY as a reference. What I mean is that if you're looking for a stock to go up and the SPY is going down, there may be some downward pressure on that stock, and you may want to wait until it's moving in the same direction as the SPY, especially if you're trading a top 10 stock in the SPY. So if you're trading a top 10 stock in the SPY, you'll be trading what Apple, Nvidia, Microsoft, Tesla, Berkshire, Broadcom, so on and so forth. But you just want to make sure that you reference the SPY at least once, especially if you're just trading. Now, if you're investing, you're buying long term, that can be a different situation. But I always like to check the SPY. So we'll be looking at the SPY. We'll be looking at Coinbase. Coinbase has been doing great. If you were in our last session, I called Coinbase for a falling wedge, down, up, and it popped out just like I said. I said we can expect some volatility, and boom, we did. And it's been running ever since last Sunday. So Coinbase is going to be another one that we're going to be looking at to see where it's going next. We're going to be looking at Nvidia because it looks like Nvidia may be breaking into some new all-time highs. I think we may be at that point. So we'll be looking at Nvidia. Apple, I think Apple is going to break some new all-time highs potentially as well. And then we have Crocs, which I think, again, this one has been doing great. And I think that this one is a sleeping giant that people aren't paying attention to, but I would like to add it to your watch list for this week. And then the next one is DKS. Really nice growth stock. Again, it's an underappreciated growth stock, but I think that they're coming back out of consolidation, and it looks like we could be testing some highs with them in the next few weeks as well. So these are the ones that I'm going to be looking at and breaking down after we do the breakdown. So again, if you have any stocks that I just didn't talk about, you can go ahead and put them in the chat, and I can see that Ty has already dropped a few. Got Micron, Nvidia, Chipotle, Microsoft, and I don't know what CEG is. I think that's not Chig. I don't know what CEG is. It may be an energy stock or something. But yeah, go ahead and throw them in the chat, and we'll get to it. All right. Clear this up really quick. All right. So first indicator is the RSI. The RSI, the way that I like to use it, because I think that when using the RSI, I like to gauge it between 45 and 55 pointing up. That's my up signal to get into a trade, but that's the perfect signal, right? Sometimes your RSI is not going to be perfect. As you can see with the SPY, I think the SPY is going to continue moving up, and the SPY is way above 55, right? Again, my range for the SPY for entry for a trade is 45 to 55 pointing up. Right now it's at 65. So the question may be, is it too late for a trade? Well, the SPY's RSI is going to top out at 70 when it comes to being overbought. But after 70, it can keep going, right? Like we see here, we had 75, here we had 77, and here we had about 79, 80. So we can see some over revving happening here, but it's just dangerous because once you get up there, you never know when it's going to pull back, and that pullback is going to be pretty sharp. You can see when we hit 77, sharp pullback. When we hit 79, sharp pullback. When we hit 75, really sharp pullback. So one strategy that I like to do is when I see the RSIs over revving like this, I may start to move into put positions if I'm playing, if I'm using puts, right? Like if I'm playing options and I see that the SPY is really high, like 77, 75 is way above 70, I know eventually it has to come down. It can't maintain an RSI that's above 70. So that could be a good signal to play puts for you. But yeah, this is the RSI. Again, it's a good gauge on if a stock is overbought or oversold. Overbought is going to be 70 plus. Honestly, I like to say 65 plus, but it just depends on the style of trader you are and how risky you want to be. And then oversold is going to be down around the 30. So we got 30 at the bottom, 70 at the top. Stock is oversold at the bottom around 30 means it's been sold too much. And then the stock is overbought around 70 at the top, meaning traders bought too much or are buying it at a rapid pace. Do I have any questions about the RSI? Extremely simple, easy to use, easy to keep an eye on. All righty, let's move. All right, next thing, the body of the chart. All right, so the body of the chart, the indicators that I have here, I have two. I have the VRVP and I have the MA ribbon. So we'll start with the VRVP. Normally we do it last, but the VRVP, let me bring up my data window. So this is where you'll get the information for the VRVP. I mean, you can get it on the chart as well. And VRVP stands for visible range volume profile. So what that means is that it just takes the information from whatever is visible on your screen. How many ever candles you have in this window is going to give you the reading for that data on this side. And so the data is going to give you is volume profile data. So it's visible range, whatever is visible, and it's going to give you the volume profile for that. So it's going to give you the volume profile per price point. And you can make this, I mean, the bars are pretty big right now. This is kind of average, but you can also make it really small to where you have a lot of mini bars, right? So you can change this from 20 bars to 200 bars to 300 bars if you need it to zoom in that much and be that granular. But this also adjusts, again, it's going based on what's in your screen. So you scrunch it up like this, give it a second, it'll adjust. If I zoom back in, give it a second, it will adjust. And so when you're looking at this, the blue and the yellow stands for, you can see here, we have down, and the blue stands for up. So since we're talking about volume, this is up volume and this is down volume. If there is more blue, that means that there's more up volume, there's more buys at that price point, at that level. If there's more yellow, that means that there is more sales at that price point or at that level. And so what you can do is hover over these different nodes, and you will get the reading in your data window right here to tell you what's what. So if we hover, like we're hovering over this node here on the daily, right? This node is telling us that we have 39 million down and we have 23 million up. So we have more down volume than up volume. And we can kind of tell because we can see that once the stock reached this point, we start to get some pullbacks on these two big red candles right here. Start to kind of stutter out for a second. And then it's like if we hover over this one, this one, you can see that we have up volume at 79, down volume at 61. So that means if the SPY was to pull back and come into contact with a level that has more up volume than down volume, that could be a potential bounce point for you. So this next node right here, I don't know if you can see it. Let me see. This next node right here around 575 to 577, there's 37 million up volume versus 9 million down volume. So way more buys than sales sitting right around 575 to 577. So again, the SPY is at what, 584. If it ever pulls back down to this level, there's a lot of people waiting to buy at this level. So that's the value in the VRVP, is that it can tell you where the buys and sells are at, and then you can dictate if you want to get in a trade or out of a trade based on where you think that the sales or the buys are going to be triggered. Do I have any questions about the VRVP? Cool. All right, next thing, MA ribbon. This is real simple. This is the moving average ribbon, and you can change the MA ribbon to adjust to whatever your trading style is. MAs just simply stands for moving average. You can use EMAs, SMMAs, WMAs, VWMAs, so on and so forth, or you can have a mix of both. Right, you can have two SMAs and then two exponential moving averages. And then in this column, this is going to be how many units it counts. So since we have 20, 50, 100, and 200, and we're also on the daily, that means this is 20-day, 50-day, 100-day, and 200-day. And you also don't have to use 4. You can uncheck the box to turn them off or add them on. I like to use 4. I started out using 2, but again, that's going to be up to you. So this MA ribbon setup that I have here, again, we have 20, 50, 100, and 200. I like to use these 4 because the 20, that goal line is going to be my driving line. And as long as my 20 is above the rest of my moving averages, I know that the stock is trying to trend up. Now, if you get them in chronological order, you got 20, 50, 100, and 200 from least to greatest. That means that that 20 is going to act as a bounce point, right? And we can see that it just did that here. The stock went up to resistance, the resistance we had set. It came down on a pullback. Once it hit the 20-day moving average on this red candle, it bounced right out, and we had what 1, 2, 3, 4, 5 green candles in a row that bounced us right off that 20 MA. So again, the trick here is to make sure that they're in chronological order from least to greatest. And then if we get a pullback that comes into contact with that 20, that's a good sign to say, okay, we should be bouncing off that 20 to the upside. You still want to check your other indicators, but more times than not, you should be ready for a bounce off that 20 if everything else checks out. Do I have any questions? Let me take a sip of coffee. Perfect. All right, let's continue on. All right, MACD. This is the moving average convergence divergence, really scientific name for a simple tool. The moving average convergence, the MACD, let me stop, is really simple. It tells you the trend. It tells you the overall trend. And I think when you get into multi-time frame analysis, the MACD is really helpful with making sure you stick to your guns. I know sometimes you may look at different time frames when you're trading a stock, and you may not know which way it's going because of conflicting information. I think, in my opinion, if you're looking at, let's say if you're looking at the weekly, the daily, and the 4-hour charts, and you're doing a comparison between the 3, if your weekly is in an uptrend and you look at the MACD and you confirm on the MACD that the weekly is in an uptrend, the rest of the time frames could have pullbacks, slight pullbacks. It could have slight moves of consolidation. It could have all of that in it, but the overall trend is still going to be up. So let's say you jump in an option trade and you set it out for a month, and you're kind of nervous. You see, a slight pullback on day 1 out of 30 days in that option trade. You still can be a little comfortable because looking at the weekly is the overall trend. You have 4 weeks on that contract, or about 5 weeks, depending on what month it is. And then you can kind of ride it out for a second. You don't have to hop out as soon as you hop in just because you had 1 day of a pullback, because you trust the MACD on the larger time frame. And again, the MACD is going to tell you if it's in a buy trend or sell trend. The way that you read it is that if this blue line is on top, so this blue line represents buying pressure. So this is the pressure to buy. So this blue line is on top of the red line. That means that the pressure to buy the stock is being applied, right? And if the red line is on top, that means that the selling pressure is being applied to the stock. So that means that people are going to want to sell when the selling pressure is applied. People are going to want to buy when the buying pressure is applied, right? And we can see, let me reset my chart really quick. We can see what happens when when that selling pressure is on top. So just comparing these two here, we can see that from here, what is this? From July, from this candle all the way down to this candle, the MACD was crossed over to the downside, and we had the red on top. So we had selling pressure being applied to the stock the whole time. If we look up to see if it's reflected on the chart, yep, stock is selling off. You have a few green candles in there, but majority of them are red to the downside. And then once we had this confirmed MACD crossover to the upside in this area, to where the blue is now on top of the red, so that buying pressure is being applied to the stock, look what happens. We have a crazy run back up to level, and then we went into consolidation. So that, again, the MACD is going to tell you which trend is there. It's not going to tell you what every single candle is going to be, but it's going to give you an idea if you're in a buy trend or if you're in a sell trend. Do I have any questions? Let me check the chat here. It's Constellation Energy. Oh, that's CEG. No, it's clear about the VRVP. Cool. All right. Last thing, stochastics or stock RSI. This is similar to a normal RSI, but this is going to be your momentum indicator. If you want to know how volatile the stock can move up or down, you may want to check the stochastics RSI. So this RSI likes to frequent 0 and 100, and also has some stops along the way. So you have a stop at 20, 50, and 80 in between 0 and 100. And you can see what I mean by it frequent 0 and 100. Look at how many times it touched down here, and look at how many times it touched up here. So reset that. So when you're looking at the stochastics, the easiest way to use it is that if you want the stock to go up, you want the stochastic to be pointed up. And then depending on how far down it is while it's pointed up will tell you how much gas it has left in the tank. So right now we're at 72. Again, this can go all the way up to 100. So if the SPY decided to move, it looks like the stochastics is telling us that if everything else aligns the right way, and this RSI, I'm sorry, this stochastics RSI is pushed up to 100, the SPY could be at 587 to 590, right? So that's the way that you want to use this. Sometimes you're not going to see it in this setup this way. You may see your stochastics all the way down here at the bottom. And if you see your stochastics all the way down here at the bottom and the rest of your indicators are telling you that the stock is going up, that is actually a good thing. Now, with your normal RSI, you may not want to enter a trade with the normal RSI all the way down at the bottom of its chart unless you plan to hold long. So this one is a little bit more sensitive than your normal RSI, and it's going to be moving way, like, let me show you. This is your normal RSI, right? You see how many bumps and humps it has in it, but look at your stochastics. It's just oscillating up, down, up, down, up, down. While this one is kind of moving slowly, but surely this one is actually moving a lot. So again, your stochastics is going to be your RSI. I'm sorry, I said your stochastics is going to be your RSI. Your stochastics RSI is going to be your momentum indicator. Your MACD is going to be your trend indicator, and your RSI, your normal RSI, is going to be able to tell you the stock is overbought or oversold. Let me check the chat. Should we wait until the crossing in the MACD or the curl? Great question. Should we wait until it crosses, or should we wait until the bend happens? So depending on what style of trade you're playing, like if we look at NVIDIA, right? Let's look at this MACD, right? So the curl has already happened and it's right about the crossover. So anytime you see something like this, the first thing that I would check is my stochastics. How much momentum can I get out of this crossover, right? And so what you can do is on this one, I would feel better with getting in before the crossover if my stochastics looks great. So if my stochastics is at 50, 60 or lower, then I'm good to go, because once this crosses over, I know that we're going to get an explosion, a pop to the upside, and then my momentum indicator on my stochastics is telling me that we have some gas in the tank to keep moving. So you could get in before the cross, or you can get in after the cross to play the continuation, but there's risk on both sides. So the risk before getting in is that you can get faked out, right? So you may have times to where like we look at the chart here. Let me zoom in some. If you look at I said stochastics, if you look at the MACD here, you can see that the MACD line, this blue line, was curling, and there was a potential crossover right here that it was going to cross this red line in this area. If you would have hopped in right here, it just broke all the way down and sold off, right? So that's the danger of jumping in too soon. But then also, if you jump in late, because as soon as that crossover completes, you're going to get a nice size candle to start the trend, because we're going from a sell trend to a buy trend. So you're going to print a nice candle to the upside, and you may not want to miss that, especially if you're trading options. If you're trading options, time is of the essence, and you may want to try to get as close as possible, or you may just want to wait to be safer, let it cross over, and then just play the continuation afterwards. Does that help, HS, in the chat? Yes, perfect. Cool. Any other questions on the MACD while we're here? All right, cool. Any questions on the stochastics RSI before I pass it over to Mark? David.
Oh yeah. The perimeters. What do we have to put our own perimeters, or the perimeters is just it comes with the how do you call it?
You said that we have to set up our own MA
Like,
ribbon.
yeah, no, the perimeters, like the when you have the
Oh yeah.
5.
No, you can. Yeah, no. For this setup, the only
Yeah.
thing that I would adjust is my MA ribbon. So your MA
Okay.
ribbon may not come set up
Okay.
like this.
Yeah.
But like as far as the VRVP, you don't need to adjust it.
Okay.
If you wanted to adjust your VRVP, I can show you real quick the benefit of it. So you look at these nodes, they're kind of blocky and big. And if you
Yeah.
want to like scalp or day trade, you may want them smaller.
Okay.
So you could like change you could
Oh
change it
yeah.
that right.
Yeah.
That way you can, you know, if
Good.
you're on like a minute chart, you can get the readings for the volume profile, you know,
Okay.
smaller. But for this setup, that's the only thing that I've changed. Other than that, all of my other indicators I leave on standard settings, especially just
Okay.
for swing trading.
All right. Thank you.
No problem. Great question. All righty. Any other questions before I hand it off to Mark? All right, cool. I'll go ahead and pass it over to Mark so he can cover some of y'all picks.
Appreciate it. Give me 1 second to share my screen. Also got to sign in my trading view again. Perfect. Okay. Let's check the chat to see. Okay, I see quite a few. So we'll start with MU. All right. Daily. Let's take a look at the weekly. See what's happening. All right. So we see that MU is currently at 111 and it's currently testing the 20-week moving average. It's trying to, if we can see MU break above this 20-week moving average, we should start to see it continue to increase to this 130 range that we had drawn, completing that double bottom that we had set up quite a little while ago. So we see it's testing that area. So if we can see that breakthrough, we should start to see it increase. Looking at all of the other indicators, this is setting up for a run, right? We have the RSI, it's at 53, so it's inside of that sweet spot pointing upwards. The stochastic RSI still hasn't reached that overbought region yet. You see it's in the neutral zone pointing upwards, so we still have room on that. And we're really close to a crossover to the upside on the MACD. So we can get that crossover to the upside on the MACD. We should start to see this continue to increase and get back to that 133 range. Now, if it was to reject this area and trend downwards, it's going to come and try to test about 101, about 100, 101. And why I say that? Simply because that's our 50-week moving average. So that's our next moving average that we're going to test. And if it was to break below that moving average, then we could start to see it come back down to, I wouldn't say back down to 80, 85, but if we drew our support once more, we'll say that it could come back to about $95 to $90. But overall, looking on the weekly chart, this looks like it should start to increase to the upside. We also have now I'll clear this out as well. We also have a potential bullish flag forming. That's just more indication that that double bottom is going to complete. But we have this bullish flag to where stock price went to this area. Then it started to consolidate, creating this flag. that we see here. And it's trying to break out of it. So if it breaks out of it, again, if we take from here to here, which is 105 to about 85, so that's about a $20 increase. We could be seeing this once it breaks out. It should be going back to $20, which will also be where our double bottom ends, right? So it's going to be at the very top of that double bottom. So that's two bullish indicators. And then also all of the other indicators, the RSI, stochastic, and the MACD are all showing us that this could have a bullish run on the weekly. So we could be seeing this happen. And let's look at the daily to see what's happening on the daily. Okay. So looking at the daily, we can see that it's testing our 100-day moving average. So we can break above this. Again, we should start to see this continue to climb upwards. Those moving averages, while they are underneath the 20-day moving average, is getting really close to breaking above that 200-day moving average. And with that, when we see that happens, anytime that the price touches that 20-day moving average, we're probably 9 times out of 10 going to see a rejection to the upside. So we could be seeing it like pull back or cool down, but it's going to cool down to that 20-day moving average and try to reject price from there. Now, looking at the RSI, it's just a little bit outside the sweet spot, but it still has room to get back to that overbought region. So we still have room on there. And then we see our stochastic is really close to that overbought region. But we also know that the stochastic could live inside that region for quite a while, like a couple of weeks or maybe a couple of days. We can see it live in that area, but it is kind of high. So if you were looking to get into a trade, what I would be waiting for is for this on the daily, can we see the stock price break above our 100-day moving average? If we can see it break above and hold on one of those days, then I will feel more comfortable getting into the trade and then potentially seeing it get back to that 132 range. If you're looking to try to trade it on a daily. Now, if you have contracts or you're looking to trade it for a few weeks, then on a weekly chart, it's a good time that you can get in and you'll just have to hold it for a little while. So you can buy low and sell high because that weekly chart again is looking really bullish. And that's MU. Do I have any questions on Micron technology? So the next one is going to be NVIDIA.
Quick question. Is there a resistance level that you would consider selling at with MU?
Yeah, so my resistance level would be, if we go back to the weekly, it's going to be the top of that double bottom. So it's going to be sitting here at about 133. 130, 133 would be the next level of resistance that I can see happening. Now you can draw it a little bit tighter if you wanted to, and you can call it about 125. But overall, I'm thinking that it's going to complete this double bottom. And with the completion of that double bottom, my all-time resistance for that level is going to be 133, 130.
Can you predict if it will break through that and continue higher, or if it's going to kind of move towards support?
I mean, it can potentially happen, but we'll have to wait till they get to that level to start to see what's happening. Like it may have more room to continue to go up, or at that point, I'm thinking that it's probably going to hit that, and then it's going to start to try to consolidate at least, if not pull back, because it's getting really all-time high levels. Like all-time highs is going, of course, like 150. What's this? It's sitting at about 157 is going to be the all-time high. But we can easily see it get back to 130. But from there, I'm thinking it's going to try to reject that price and trend down a little bit.
Okay, thank you.
Mm-hmm. All right. Okay, next one was NVIDIA. All right, so NVIDIA is setting up. You can see the RSI is a little bit outside the sweet spot of 45 to 55. It is pointing upwards. And we see previously, we have seen the RSI level gets to about 86, 87. So it does have a little bit more room to continue to go up from the RSI. And then looking at the stochastic RSI level, this is also, it's in the neutral zone. So this also still has room to increase and get back to that overbought region as well. Now, Nvidia is hitting its all-time highs. So we see that it's currently testing all-time highs. So we can draw resistance basically at this area. And like I said, anytime a stock breaks its all-time high levels, I start to like to treat it as $5 to $10 increments depending on the stock. So this one, I'll start off with $5. And if it's moving relatively quickly, you can switch your support and resistance lines to $10. But if this was to break above our current resistance, we could be seeing this at the moment get to about 145, maybe 150. It's going to be the next price that it could potentially get to. It is setting up to continue running. So what may happen is we may see a little decrease in price. We may see it test this 20-week moving average, and then from there we may see it start to increase and continue to make its run that it's doing. So on the weekly, again, this is setting up to where if you was trading this, I would be a little bit careful. I would try to trade it week by week and pay attention to it because it is on all-time highs. We don't know the next level that it could potentially make it to. So it's always good just to always analyze the chart and see if it's time to get out. But looking at it right now, if you was in this trade, I would say pay attention to it, but I wouldn't necessarily be too worried about getting out right now once the market opens up on Monday, because looking at this weekly chart, it does look like this still has room to increase. We just would need it to break above that resistance level that we have here at about 138 for it to continue to run. And then looking at the MACD, we can see that we're really close to a crossover to the upside as well on the MACD. So I would just be paying attention to the news and seeing, I would just be paying attention to the news this week and watching the charts every single day. Let's check out the weekly to see what could happen let's check out the daily to see what can happen. So on the daily, again, stochastic RSI is kind of high. It is pointing, it's pointing upwards, but it was coming from pointing downwards. It was coming down from this overbought region. So we could be seeing this continue to decrease. If we was, then that's going to get us close to a crossover on the downside on the MACD to where our buying pressure blue line will cross underneath our selling pressure, and that can cause the stock price to decrease in value. So I would just be a little bit careful. Again, pay attention to it because we are testing that resistance, and we can see we've been testing resistance and it hasn't broken past it. So we could be seeing this get weaker and weaker and decrease in value. If it was to go down, the place that is going to probably try to come and get to is going to be here at about 130. And then at that point, that's going to be our 20-day moving average. So that could make it a strong line for it to reject. So what I'll be looking for is this week is if we reject the resistance, can't we make it back to 130? And if we do, what happens at 130? Do we reject 130? If we do reject 130, we're going to probably see it try to get back to that 138, 140 range. And if we break below this 130 range, then we'll probably be trying to see it get to back to about 120. So that's what I'm seeing on NVIDIA for this week, looking at the day. Any questions? All right, Chipotle. So Chipotle just broke a resistance level we had, drawing at about 58. So because it's broken above that $58 resistance level, is now its support. So support is at 58, and the next place we could be seeing this get to is about $62, $63. Looking at the weekly chart, RSI level is pointing upwards. It's a little bit outside the sweet spot, and we have a stochastic. It's still has a little bit more room to get back to that overbought region. So we still potentially have bullish momentum happening here. Pair that with this crossover that we just had last week on the MACD, we could be seeing this get to the this $62 range, $63 range. So we could be seeing that happen in the next 2 or 3 weeks. We could be seeing this get back to the $62 range. It does look like that could be setting up. The one thing I would be a little bit careful on is, are we going to see a rejection? If we see a rejection, then that could start to have us come back down. Eventually, to the 40 to the $50 range. And why I say the $50 range, just because if we was to have a rejection, this could be setting up to be a double bottom, which is bearish, which is bullish, excuse me, but it's going to have to come down first. So we have that first leg. We may see it come up here. If we see a rejection at this current moment, we could be seeing this stock price get back to this $50 range before it starts to turn back around and try to get back to that 62. But again, it's looking like that's probably not going to happen. It's looking like this has room to continue to get to this $63 range for our resistance. So that's why I would have my resistance level at. So that's where I would be saying, okay, at this point, if I'm in a trade, I'll be looking to go ahead and shave profits and reevaluate the stock from that point. And let's look at the daily to see what's happening. All right. So the daily stochastic, the RSI level is at about 57. It's pointing upwards. It does have room to get back to the 70 range. Looking at the stochastic though, it does look like it's starting to point downwards and it's trying to get back to that oversold region. So I would just be on a little bit of a lookout for that. And pair that with this MACD, a pending crossover to the downside. If we was to have that downwards pressure, we could then be seeing this start to try to trim back down to that $49, $50 range. Now, that's not going to probably, $50 isn't going to probably happen this week. What's probably more realistic to happen is if it was to decrease, it's going to break below our $59 range for our support. We would then be seeing it trying to get back to about 55 this week. So we could be seeing this get back to 55 this week. And if it's reject this area, we could somewhere be seeing this try to get back to $62. So that's what I'm seeing for the for this week. But more than likely, just looking at this daily chart, it's looking like it needs to cool down a little bit, and that cool down could get us back to about 56. So just be a little bit careful. Any questions on Chipotle? It's also nice to mention that they have earnings in 2 weeks. So Tuesday, October 29th, they're going to have earnings. So just be a little bit careful with that as well. Earnings can make it everything. Earning makes everything 50-50. You don't know which way it's going to go. All right. Next one, Microsoft. Let's take a look. Microsoft. So Microsoft currently is testing support and resistance. We can see here we have support at about 411, 410. That's going to be our 50-week moving average. So that's going to be a nice strong level of support that it's trying to test. If we can see a rejection from this, I'm thinking it's going to probably break above our 20-week moving average as well and start to continue to try to get back to this 462 range. Looking at all of the indicators, we could see this trend down a little bit more. But just looking at the indicators, the stochastic, the RSI level is in that sweet spot. It's starting to point upwards. The stochastic RSI level is really low, so we still have enough room for it to get back to this $100 range that we have here, or this 100 range, excuse me, on the stochastic RSI. And then the MACD, while the blue line, my buying pressure is below my selling pressure, eventually we'll start to see the blue line start to point upwards and start to want to go back up in the upwards direction. So that's what I would be waiting for, is just to start to see my MACD point upwards. Once I see that, I will feel more comfortable getting into the trade and saying, okay, this can make it back to this 464 range. How long that's going to take, I can't tell you how long it's going to take for it to get back to that range. But if it was to break above 422 and it can stay above 422, it can close above 422, we should definitely start to see this try to get back to that 463 range. And let's see if that can happen this week. Let's see if it can break above this 422, 423 range this week. All right. So looking at the daily, it can break above this 422 range. It does have a lot of stops to make though. So it's going to be a tough break above it. It's going to take a strong day of trading for this to break above this 422 range, just because we have a cluster of our moving averages together, 200. We see the 50-day moving average, my 20-day moving average are all next to each other, and then we have that 100-day moving average that we'll have to break to as well. So looking at the daily, if we can break above the 100-day moving average, I will feel more comfortable saying that we can get into a trade to the upside, because that's going to be a strong break, and then it's going to take a lot for it to get back below those areas as well. And looking at the indicators, again, we still have room on the stochastic RSI for it to get back to that overbought region. RSI is in a nice spot pointing upwards, and then we're really close to a crossover on the MACD to the upside. So it is pointing up bullish. The only thing I will be waiting for is, can we get above this 427 resistance we can draw here, which is going to be our 100-day moving average. So if we can get above our 100-day moving average, we'll be in a nice place for it to start to increase and start to try to make it back to 463. From there, the first place it's going to go and test is going to be here at about 440. That's going to be the first place it's test. And the reason why I chose that is because of this activity here. We see back here as well, we have activity to where it rejected the price, and then even back here, it tested this price as well. So that's the next place, once it breaks above our resistance, that it can get to this week. So we could be seeing this get to about 440 this week. So I would just be on the lookout for that. But it will have to break above 420, 430, 428 before we can see that happen. Any questions on Microsoft? Okay, perfect. So the next one we have is CPG. CEG. All right, so let's draw some support and resistance on the weekly. So resistance wise, we can basically in the all-time high ranges. So we can basically use this 285 range as my resistance. The next place that we could potentially see this get to, if we was to draw support, we can draw it relatively tight. We can call it here at about 254, 255 could be support. And then if it was to break below that support, the next place is going to come and test and draw a nice clean support at about 220 will be the next place it can test. I'm thinking this one big candlestick was probably earnings. So that's why that huge candlestick already has some nice news that happened right there. Looking at the other indicators, my RSI level is a little bit high. It's getting close to that overbought region. Stochastic RSI level, we can see it touched the 100 range, and then it's starting to point downwards. So I'm thinking we're probably going to see this start to decrease in value. We do have the MACD to where it had a crossover to the upside. It does have separation. So you could try to play this to the upside. If you was, I would be looking at, again, my target price is going to be this resistance at about 280, 83, 284 would be my target price. And I will be a little bit careful because of where that RSI level is at. I'm thinking that this may need to start to cool down. And with that pullback that's going to happen, again, the first place is going to come and test is 253. And if it breaks below that, we could be seeing this get back to about 220, 222. You could even draw it a little bit higher if you wanted to and call it 230. But that's what it's looking like on the weekly. If we look at the daily, yeah. So we look at the daily, the RSI level is really high and it's pointing downwards. Stochastic RSI level is low. But we know that it can stay up below that level for a little while. So I would just be a little bit careful with that. We just had a MACD crossover last week that to the downside has been trending down. So again, what I'll be looking for this daily is, can it stay above my support level here that I have at about 254. If it can stay above that level and reject, then we could be seeing this try to get back to about 285. If not, then we're definitely be more than likely seeing this get back to about 230. And with that, if you look, you can see a pattern being formed here. We can call this it's not the cleanest, but then that would be a double top, which is just a bearish version of a double bottom. And so what happened is stock price was going for this action. What we could be seeing, if it was to break below 254, again, it's just going to be coming down to about 230. So that's what I'm seeing here, a potential double top forming, making that M shape. The one thing you will be looking for is, can it break below 255? If it breaks below 255, then we're going to be seeing 230 on this stuff. But it's in a weird space right now. So I was just waiting until Monday for it to open up to see which way it's moving on Monday, and we can try to gauge exactly which way it's going to go for the remainder of the week. Any questions on Constellation? All right, CIFR is the next one. Cipher Mining. Cipher Mining, they do have earnings Thursday, October 31st, so just be a little bit careful with that. Let's check out the weekly first before we check out the daily, just to see. All right, so looking at the weekly, I do see that we're currently testing resistance at this current range. We can see this is a nice strong resistance level at about $4 and clear this off the way. $4 or $5. It's going to be a nice strong resistance level for this. We see we have tests here. We have tests back in this area, this area, this area. If we go back, we can see even further. It tested even when it was at its all-time high levels and coming down. It shot all the way down to this resistance level, and then it shot back up. Oh, it was support at this time, but once it tested support, it shot back up. And even when it came back down, it tested this area again. So that's a nice level for us to call resistance since we're below it. If it was to break above our resistance that we have drawn here at $5, the next place that I can see it going as resistance is we can have a strong resistance here at about $6. So a dollar increase in price. And the reason why I chose that is just because of this activity we had when it broke past there. So this 1 week right here broke above it. We can see it got relatively close, even here, close, close. And if we come back, we can see this was a nice strong place for support at one or resistance at one point. So that's the next level. So if it was to break above $5, we could be seeing this get to $6. Looking at the indicators on the weekly, again, it's setting up for a 2 increase to that $6 range. Just looking at where the RSI level is at, it's at about 56, pointing upwards, just a little bit outside the sweet spot. So it's pointing upwards. Stochastic RSI level is in the neutral zone, pointing upwards. So we have room for it to get back to that overbought region on the stochastic. And we just had a crossover on the MACD to the upside. We have one green bar. So with that, we could be seeing this get to $6. The one thing that we mentioned about earlier was the earnings. So once that earnings report comes, this kind of all, it kind of cancels out all the indication, all the technical analysis you're doing. But if we can see this increase up until earnings, we should be seeing it try to get to $6. And if we look at the daily, stochastic RSI level is kind of high. Again, it can stay in that area for a little bit. We have a little bit more room on that RSI level before it hits that overbought region, and we have a crossover on the MACD to the upside. So we can break above this $5 range. We could be seeing 6. It's going to have to be a strong break above that $5 range. And we could see this happen. We could see this stock run up until earnings, and then at earnings is no telling what may happen, but we could see it run up until earnings up. We could see it run up until earnings. So I would just be, but if I'm looking to trade this stock Monday, I'm looking, can we break above this $5 range? And if we can break above it, does it look like it's going to hold above it? If it looks like it's going to hold above the $5 and it's going to start to treat our resistance as support, then you can feel comfortable about getting to it to $6. Now for support, if it was to reject this area, our support level, the first place I'm going to call support is going to be my 100-day moving average, which is right here at about $4.20, $4.25. So if we was to see this reject, we could be seeing it get to $4.25. And if it was to break underneath that, the next strong place is going to try to test is going to be about $3 or $4, which is our 200-day moving average. Just sitting at about right there. So it's sitting at about $3.96, almost $4. Any questions on cipher mining? Let's see. Yeah, Tesla. All right. Tesla. Tesla has earnings on Wednesday. All right. So looking at the chart, Tesla is testing a support here at about testing support here at about $2.13. It's going to be where it's testing support. If it was to break below that area, again, we have two moving averages on stacking on top of each other. So that's going to be the next strong level that it's going to try to test, which is about 206. So you can probably negate this 213 support and call the next support line about 206. So that's where I'll draw my support. I'll be looking to see what happens here. If it breaks below this support at 206, we could be seeing this get back to about 190. If it was to reject this level of support, and then again, we're going to start to see this increase, and that increase is going to try to get us back to about 235, which is going to be this 200-week moving average. So that's the next level of resistance that you can draw. So if it was to reject this at 206, we could be seeing this get to 235. And if it was to break above 235, then we're going to see it try to get to 259. So the way that it's kind of in the middle right now, the way that I'll be looking for this to trade this is I would just be waiting for it to confirm which way it's going to go. So if it pulls back, I'm waiting to see what happens at 206. If it's going up, I'm waiting to see what happens at 235. If it breaks above 235, I'll feel comfortable getting into trades at 257. If it was to pull back from 235, I would be looking to get into trades to you can be looking for put options to about 190 if it was to break below this 206 range. And if it was to reject 206 and trend upwards, it's then going to be coming to 235. Looking at the indicators on the weekly, it's showing us that this does have room to decrease. MACD is really close to crossover to the downside. Stochastic RSI level is pointing downwards, excuse me, trying to get back to that oversold region. RSI level is in the neutral zone, so there's that as well. And if we look at the daily, we can see that on the daily, it's showing us that this should be increasing just because of the way that it's looking, or just because of the indicators. The RSI level is in that sweet spot. Stochastic is in that sold region. It could stay under here. So that there is a thing, it could stay under here and cause us to decrease to about 206. And then we have the MACD, the buying pressure blue line is beneath the selling pressure. So the only thing I'm waiting to see is, can this blue line start to point upwards and get closer to crossing over to the upside on that red or orange line we see here. Again, earnings is on Wednesday after hours. So I would still just be a little bit careful if you're trying to do a trade on this. If it's getting close to 4 o'clock or 3, if it's 3:55 on Wednesday and you're still not sure, I would definitely be out of this trade, just because I know that with earnings, you never know which way it's going to go. It can cause the stock to go up or down. And you don't want to get caught in the trade, especially if you get caught in the trade and it pulls in the opposite direction that you think it's going to go. So just be a little bit careful. You got about 3 days to trade. If it's looking like it's not going to make it to where you need it to get to by Wednesday, I would go ahead and get out that trade just to steer clear of earnings. I don't personally like to play earnings because, again, 50-50. And for me, it's probably a little bit different percentage because I don't really win on earnings. Any questions on Tesla? All right, perfect. Let's see what else we have here. Got a few more. This PR timing. Okay, still got doing good on time. It's PR. Let's check out the daily, and then let's check out the weekly, and then we'll move to the daily. All right. All right. So let's start out with some support and resistance, and we can look at the other indicators. So current price is 249. If I was to draw my support from this level, I'm going to use my 100-day moving average to draw that support. And it's going to be sitting here at about 231. If it was to break below that, the next place that is going to treat support is going to be around here, which is sitting at about 188. $1.88 is going to be the next level of support if it was to break below our 231 support. Now for resistance, we can just draw strong resistance here at this 200-week moving average, which is sitting at about $3.35. So that's going to be where our resistance level is at. And if we was to reject our support at 280 at $2.30, then we're going to be seeing this get to about $3.30. So that's where it could be getting to. Looking at the indicators, everything is pointing downwards. So I would just be a little bit careful. The RSI level is pointing downwards. The stochastic RSI level is in that oversold region, but we know it can stay down there for a little bit before it starts to turn around. And the fact that we have a crossover to the downside on the MACD, we could be seeing this get back to this $2 range or this $1.88 range before we start to see it trend upwards. So I would just be a little bit careful on this before I get into that trade. And let's look at the weekly. The weekly may tell us that this is about to test the bottom, but just looking, or the daily may tell us is getting close to the bottom. But just looking at the weekly, it's telling me that we could be seeing this get to 188. All right. Yeah, so looking at the daily chart, yeah, we have some current price 249. We have our first support at 231. On the weekly chart, if we was to do the daily, where we can see that we're testing support right now on the daily chart, and then the next place is going to be that $2.30 range. So looking at the other indicators, we do have the stochastic RSI level is in that oversold region, and again, we could see it stay beneath there. With that, we could be seeing this get back to this $2.30 range. So what I'm looking for is on Monday, how does it open up? If we break below this $2.50 range, I'm looking to see what happens at $2.30. If we get to $2.30, can we reject this price? If we reject price at $2.30, then we're going to start to see it try to get back to $2.50. And if we see the price reject this current level of support at $2.50, the next place is going to come and try to test is that moving average. It's going to come and try to test this 200-day moving average, which is sitting here at about $2.59. So just like a 10-cent increase in price is where we could be seeing it get to. And if it breaks above that, the next place is going to come and try to test is going to be this $2.66, which is basically in between these two moving averages. That's the next place it's going to come and try to test this week if it was to continue to trend up. Any questions on Inspire?
No, you're good. Thank you.
No problem. All right. CTR. Check out the weekly. All right. Let's draw some support and resistance. So we're sitting at $4.08 right now. Currently, the place for support that we can draw, we can say it's testing support now, and then the next place that it's going to come and try to test is going to be here. Just going to draw like a nice little support. It's going to be right here at about $3. So the next level of support that it can potentially test, if stock price was to turn red, the next level of support is going to be $3. Excuse me, and yeah, $3. For resistance. Now resistance, we have 3 different moving averages almost stacked above one another. So we'll just draw it right in the middle and say that resistance is going to be here at about $4.40. That's going to be the next place. If it can break above this resistance line here, then the next place is going to come and try to test is our next moving average, which is going to be at about $4.80. So if it can break above $4.40, we could be seeing it get to $4.80. Looking at the indicators, stochastic RSI level is low. It has been sitting under here for a little bit. a few weeks, almost about a month or two, it's been sitting in this oversold region. So we could be seeing this start to try to point upwards. The MACD has a crossover to the downside on the blue line. So all I'm looking for is that my buying pressure, the blue line, to start to point upwards. And stochastic and the regular RSI is in a neutral zone flatlining. So it hasn't determined if it wants to go up or down from this point. But it is in that sweet spot of 45 to 55. It's just in the middle though. It's neutral at this point. What I'm looking for is, can we break above our, if we're looking for like a longer term trade, what I'm looking for is, can we basically break above this 100-week moving average? If we can break above the 100-week moving average, I will feel more comfortable getting into a trade. If not, then I would just be I would be waiting for a rejection. So if it was to reject, then it's going to be coming down to $3, and that's what I'll be waiting for. If it was to reject this area, I'm waiting for it to come back to $3, and then from there, can it reject this $3 range? If it does reject the $3 range, then I will feel comfortable getting into a trade, and target prices will be about $4.50. But if I'm looking to trade this to the upwards momentum right now, I want to see it break above this 200-week moving average, or this 100-week moving average, before I start to try to get into a trade. And that's on the weekly. So let's check out the daily and see what's happening this week. All right. So looking at the daily chart, we're in a nice position on the stochastic where we have a little bit more room to the upside. So we could be seeing this increase. Now looking at the daily, we would bring down our resistance level just to this 200-day moving average, because again, the stock price likes to treat moving averages as support and resistance. So if this was to continue to trend up, that's where we're going to be seeing this get to, is about $4.35. That's where we're going to be seeing this get to. And if it was to decrease, the next level we can see it get to on the daily is looking at about $4. So we could see it get to $4 and try to see what happens from there. If it gets to $4 on this week, I'm looking to see, can it reject this price? If it can reject this $4 price, 9 times out of 10, we're going to start to see it try to get back to $4.30. And looking at where the stochastic RSI level is at, we do have a little bit more room for it to go up to the upside. So I could see this getting back to 4.30 this week. Any questions?
You're good. Thank you.
Mhm. Okay, holding for the long term. Yeah, if you're holding them for the long term, yeah, that's it. All right, so current price is $167.58. My support level is that I'm looking at is going to be right here at about $160.24, 20 cents. So about 160. Excuse me. Yeah, about 160. It's going to be my level of support that I have here, about 160. For what I'm looking for this stock, because everything is looking like it's trying to continue to increase, looking at where the stochastic is at, and then the RSI level. If we was to break above this 20-week moving average, then we could be trying to see this get back to 180. If we reject this 20-week moving average, then we're going to more than likely see this try to get to 160 again. And if it was to break beneath that, the next place it's going to get to is going to be sitting here at about 150. Yeah, about 150. It's going to be the next place, and that's on the weekly. So that may take a few weeks for it to happen. We do see previously that every time it's tested this 20-week moving average, it rejected this price and continued to go up. You can see it tested this, shot up, came down, tested this area, shot up, came down, got close to it, shot up. So we could continue to see that wave happens. I would just wait for it to break back above that 20-week moving average before I was to get into the trade, because this could be just the end of this run, and we could start to see it cool down and pull back. So I'll just be a little bit careful. But if we was to see this stock price break above this 20-week moving average, which is sitting at about 170, then we could be seeing it get to, it's in here at about 180, which is at the top of this level. That's where we could be seeing it get to next if it was to break above this 20-week moving average. Let's look at the weekly. Oh, excuse me, let's look at the daily. All right, so looking at the daily, cluster of moving averages, we need to break above these moving averages. If we can break above these moving averages, we're definitely going to see it get to 180. Looking at all of the other indicators, RSI level is in a nice spot, 44 pointing upwards. Stochastic still has room to get back to that overbought region, and we have a crossover on the MACD to the upside. So all of those things are showing me that, okay, if we can break above these moving averages, we're going to be seeing this try to get back to 180. Now, if it rejects this moving average, if it rejects these moving averages, we're going to basically be seeing this get back to 160. And at 160 is where I'll be looking to see what happens. Can it reject 160? If it rejects the 160, then we'll be just seeing it get back to about 169, 170. But it'll have to reject that area before we get there. And if it was to break below that, then we're going to see it try to test wherever this 200-day moving average is at. But overall, just looking on this daily chart, it's setting up to be in a bullish moment. It's setting up to go bullish and trend upwards for sure. Any questions?
Nope, not at the moment. Thank you.
Mm-hmm. All right, last one before I pass it off to the Davis. So 5 weekly. All right. So we currently see that it's testing resistance, and it just created its 200-week moving average. So it just recently had 200 weeks of trading, and it's testing that level, and that's a strong level of resistance, right? We see that it tested this area previously, and even back here it tested as well. So strong level of resistance here at about $10.18, $10.15, or $10.20. Strong level of resistance. If it was to reject this level and trend down, the next place we could be seeing this get to, it's going to be here at about, $9.50. And if it was to break below $9.50, I'm thinking we could be seeing this try to get back down to these moving averages, which would be at about $8. So it'd be just about right here is where it'll come if it was to break past this $9.50 range. Looking at the indicators, this could be hitting as highs for the moment, right? So we have the stochastic RSI, the RSI level is getting really close to that BART region. It's sitting at about 64 point upwards. What is alarming to me is the stochastic. The stochastic RSI is a little bit high, so I know it needs to start to cool down soon. So I would just be on the lookout for it. This could have ran this course, and we could be seeing a pullback. Now that pullback isn't saying I'm not saying it's gonna come all the way back to this level, but first, if it was to pull back, we're first gonna see it hit $9.50. From there, if it breaks below $9.50, then I'm saying we could be seeing $8 for it to get back to that level. And that may take a few weeks for it to happen. Let's look at the daily to see how it's setting up on a daily. If we can continue to see this to go up or down this week. Yeah, so looking at the daily, it's looking like it's reaching its peak for the moment. Again, resistance is at about $10.40. RSI level is in that overbought region. Stochastic hit the overbought, the 100 range, and now we're starting to point downwards. It wants to come down. We do have separation on the buying pressure and the selling pressure on the MACD, but eventually we're going to start to see that blue line point downwards. And then this could be creating a double top. Just previously, this could be creating a double top. When we see price come to this level, we could be seeing it trend downwards, or it could be making a bullish flag. So what we're looking for is, if this is, if this is going to create a double top, we're looking for rejection on this resistance level, and then we want to see the stock price. Basically, we can say it break below this. We want to see it break below this resistance, or this support line we have here. At 950. We can see it break below 950, and we could confirm that it's probably going to be coming back to that $8 range. Now, if it was to break above this resistance, then we could be seeing this continue to increase. But I'm thinking that that's highly unlikely just because of how hot the RSI level and the RSI and the stochastic RSI level is. It's pretty high, so I know that it needs to come down. One thing to note, I see earnings is coming up, so just be a little bit careful with that. They're saying Tuesday pre-market earnings is coming up. So if I was you all, and that's going to be on the 29th, so I think that's in, I can't remember what today is, maybe in like 2 weeks. So yeah, in about 2 weeks, that'll probably happen. Yeah, next week. So not this Monday, but not this Tuesday, but next Tuesday is when earnings will happen. So just be a little bit careful with that. But if we was to see this price reject this area and break below this 950, we could be seeing this get back to $7 or $8, excuse me. Any questions?
No, that'll be all. Thank you.
Yep.
Thanks
Yeah.
for the clarification and understanding.
Yeah, you're absolutely welcome. Perfect. So I'm going to hand it back off to Ladarius so he can go over his picks for the week.
I appreciate that, Mark. All right, let me share my screen and take a look at these picks. All right. Actually, let's start with the SPY. So looking at the SPY, about 2 weeks ago, we said that the SPY should be ranging between 580 to 585. You can see right now it's right underneath 585 at 584.59. And we are above resistance on the week. Again, I still think the SPY is going for 600. And we're getting closer to the election. So if the SPY pulls back based on the results of the election, whatever they may be, I think that will be a good time to buy the dip, because again, I still think that this is going to run. I think that the election may have some short-term impact, but long-term, I don't think that the election will have a major impact, especially going into January, February, March, the first quarter of 2025. So still seeing more upside. I think that we should be testing about 585, 586 this week. We could see a pullback at some point. The only reason I'm saying that is because we're getting pretty close to 70 on the daily. And we've been testing this line here around 584, 585 for a second. So this line right here, we went up, we rejected the first touch, went up again, rejected again, and now we closed a little bit above it. So now we need more momentum to the upside. And speaking of momentum, if we look at the stochastics, we can see that stochastics is at 72 out of 100 and it's pointing up. So we still can get some more room, some more push to the upside. Also, the MACD is still in a buy trend, and we have a little bit more room to go up to 70 on the RSI. So I'm still seeing some moves to the upside. And I think that if we have some big earnings come in from the top 10 in the SPY, then of course that will move the SPY as well. So that's what I'm watching for the SPY. That's where I see it going. And yeah, if you have any questions, just let me know. All right. Individual stocks. All right. So Coinbase was one that we talked about. Again, we talked about this last week. It was making a falling wedge. And I said that at this point, after bouncing around 146, it looks like we were going to be breaking to the upside. It had a great week. You can see this key fact down here that says that the stock went up 25% in 1 week, which is crazy. But again, it was making a falling wedge. So I knew that some momentum was coming in somewhere. And I don't think it's over. Look at the MACD. MACD has a pending crossover to the upside. So I think that right now we're at we're at 220. I don't know where I was looking. We're at 220, and we could be making it up to about 260. We make it up to 260 one more time, I think we'll be testing a break. Once we break through 260, then we can get back up to, I want to say, 280 to 300. And if you look on the RSI, we have the space. We're only at 55. It's pointing up. We have a pending MACD crossover, and then we have the stochastics pointing up as well, and it's only at 43 out of 100, and it's forming that double bottom shape that we talked about as well. You can see the W pattern starting to form, and it looks like we could be on a rise to the upside. So with Coinbase, Patience is key. Again, it just went for 25% in 1 week. So at some point, we're going to have a slight pullback. But I think once we have that pullback, that's a good indication that it's cooling off and preparing for a move to the upside. And this is the pullback that I'm talking about. So if I look at the day, and this is just doing some multi-time frame analysis, if I look back at the day, I can see that we're already at 94 on the stochastics, which means that the momentum could be slowed until we cool the stochastics off. So I'm thinking that we could pull back to around 80, and that could happen from just consolidating above resistance. So if we go for a retest back down at about 215, we pull back about $5. That will be another good sign to go ahead and hop in and just wait. That's what I'm looking at. So after 220, next level looks like 240 and then 260. So just look at $20 increments to the upside, and 260 is the big break. If we break 260, like I said, we could be going 280, 300. And let's check the 4 hour. Yep, check the 4 hour. We're already starting to cool on the stochastics, and the RSI is at 76. So again, I don't think that the uptrend is over, but in between the major uptrend that we found on the week, there's going to be some consolidation and pullback happening. So those pullbacks will be a great opportunity to go ahead and hop in. And honestly, if I see Coinbase at 215, I'm going to go ahead and snap up some more shares. I think it's finally starting to turn the corner. And then if we look at a bigger pattern, and we've been talking about this for a while, look at the bigger pattern that it's up. The bigger pattern that it's making. I'm trying to, oh, that's why. There we go. This is a textbook cup and handle. Easy cup, handle pulling back again. We said that the handle cannot break below 50% of that cup. It did not, and we got a major green candle right here. And if this is why I say 260 is the high break point. 260 was a choke point back here. We break 260. We test 260 and we break it. The cup and handle is going to send us up to about 350 to 375. Now, how fast is it going to happen? I don't know. But Coinbase has been moving pretty fast. We've seen some 5, 10, 12% days. We just had an almost 8% day. So it could get there pretty quick, but I think that just being able to ride the ebbs and flows up and down is going to be the trick to Coinbase. But again, like I've said before, I think Coinbase is $1,000 stock. Even when it was down here at $60, I still think it has crazy potential. And again, 7%, 8%, 25% in 1 week is crazy. So any questions on Coinbase?
Outside the moment.
All righty. Mark already covered NVIDIA. Apple. All righty. Apple looks like it is ready to go. Apple had a breakout above 230. And my only issue with Apple was that if it was to break back below 230, we would have been in trouble. But it looks like it's stuck up above that 230. So we may get some consolidation and eventually go ahead and get that breakout. So Apple is on tap this week. We also see that the 20-day moving average is at 228. So as long as that 20-day moving average continues to come up, if that 20-day moving average aligns with that 230 resistance, that means that that's going to be a really, really strong bounce point. And if we have any sort of rejection, 230 would be a good buy-in point for Apple. So it looks like Apple is going to continue its run. It has a 61 RSI, still has space on the stochastics at 76, and it's just breaking into an uptrend. And they also have earnings on Halloween. So Apple is looking nice. Again, I think Apple is worth about 250 if you ask me. And then this looks even better. Look at that on the weekly, 67, pretty high, but Apple tends to overrun its RSI. We're testing that resistance at the top side. That MACD crossed over to the downside for a quick second, and then it immediately popped back up. So if we get this crossover back to the upside, again, we could be breaking through all-time highs. And then look at that stochastics, really low at about 40. So we have a lot of momentum if Apple decides to pop. And it also depends on what it looks like before earnings. So going into earnings, if we're still low or consolidating, then we may get an actual pop from earnings regardless of the print. But I can't see the future. So if I knew, I would tell you all. But that's what I'm seeing so far for Apple. Any questions for Apple? All righty. Next one, Crocs. All right, Crocs. This one has been consolidating for a minute, and it looks like it is ready to go. We got 51 on the RSI, which is really nice. We also have the stochastics at 35 and pointing up. So it's building that momentum up for us. We have the MACD getting ready to cross over. We thought it was going to get a crossover back on October 15th, but then it gave way and then it started to build back up. So if we can get this MACD crossover, then we can push ourselves higher than this 145. And if we break 145, I think we have enough energy and momentum to send us up to about 155, 160. And if we can hit that 155, 160, we can finally break out of this consolidation channel between 120 and 155 to start moving higher. Let's check the weekly. Yep, we look at the weekly, still looks nice, 52 on the RSI. Again, it just shows consolidation with the candles. And then we have MACD crossover, and we have these stochastics at 64 out of 100. So really nice setup on Crocs. I think it's an underappreciated stock. People aren't really watching this. People are watching semiconductors and tech, but there's a lot of other plays that you can make some really nice percentage gains that people aren't paying attention to. And I think Crocs is definitely one of those plays. All righty. Any questions? Cool. Last but not least, DKS, one of my favorites. All right, so DKS has been in this consolidation channel for a while, but as soon as it breaks out, and again, we're getting into shopping season, right? So we're getting into October, November, December, which we have Halloween, Thanksgiving, Cyber Monday, Black Friday, you know, the whole spiel going into New Year's, where there's a large shopping cycle that's going to happen. And I think that DKS can definitely benefit from that. And looking at the weekly, really nice on the RSI 54, strong consolidation, which is a good sign, because if it was going to go lower and break, it had a lot of opportunities, but nope, it's just been sitting between about 205 to 215, 220-ish, and then testing this high. So I think if we get another test at about 230, 228, we can break, and then we can go ahead and knock out that all-time high around 239, 240, and then we can send this up into the 260s to the 280s. You look at the MACD is going to go for another retest. Right now, it's trying to build that momentum up for where it rejected. We had two rejections, actually. We had a pendant MACD crossover. It went up and then gave way, went up again, and just bounced. And then I think the next one could be the one to get us out of this consolidation period. And then if we look at that stochastics, really low at 16. If you want to be safer, you can wait until it crosses the 20 threshold. And after 20, of course, we want 50, 80, 100. And it looks like it could be forming a double bottom as well. It started here at 100, went down to 0, came up in the middle to 60, back down to about 8 or 9, and it looks like it's pointing back up. So DKS is another underappreciated stock that I think that people are missing out on. I mean, look at this crazy run since what, October, November. This was what, $100, 105, and it peaked at about 240. So $140 in a year for $100 stock, as far as gains, is definitely nice. And I think that we could potentially see this at 300, 280, 300 could be where it consolidates at, especially once it breaks out of this period of consolidation. So keeping this one on my watch list as well. All right. Any questions? All right, cool. So what we'll do is we can actually call it here, unless, Mark, do you want to do the pattern of the week? Or do you want to post the pattern, or how do you want to do it?
Yeah, I can do the pattern of the week. That's fine.
Okay, cool.
I have
Perfect.
it to handle it.
Okay, all right. I'll pass it off to Mark. He'll do the pattern of the week, and then I'll close us out.
Right. So this week, I wanted to talk about the cup and handle. I know that there's always quite a few previous weeks he's been talking about cup and handles, and we haven't really got a chance to go over the cup and handle for a while. So I just wanted to go over that one. The cup and handles. So what are cup and handles used for? So this is basically used to let you know that the stock price is about to continue to go up in value. You'll see this pattern form in the text shape of first, you'll see a U-shape form, and this is going to be known as the cup. This U-shape is known as the cup. And then followed by this U-shape is going to be the handle. And this is just going to be a period of consolidation. That's a diagonal consolidation like you see here. And then once this pattern completes and the stock price breaks above this handle, you would then start to see that stock price rise higher and higher, make those higher highs. I like the cup and handle pattern because you can basically determine a target price by just taking the range from the top of the cup where the cup first started and then the bottom of the cup. Whatever value you get from subtracting those two prices is basically where the stock price can potentially make it to. So you can see here, it says basically at the top of this handle, it's at about 42. And then if we look at the bottom, it's at about 32. So if you do 42 minus 32, that's $10. So it's basically saying when this stock price breaks out, wherever that price is at, you can add $10 to that current price, and then that's where you'll see it rise to. So we can say that this stock broke out of this handle or this cup and handle pattern at about $42. And so at 42, if you add $10 to that, it's 52. So you're saying basically we can see this stock price get to $52. And that's the one reason why I like to use this. And I'll show you an example. All right, so here you can see, this is an example of Walmart a while ago. You can see the U shape that started here, and this is going to be the cup pattern for it. And then followed by the handle. It's going to be a quick little handle on this one. But you can see this handle pattern formed. And then once it breaks, so we're saying once it breaks out of this handle, you're then going to see it rise up to your target price. And then the target price for this one is going to be, again, the very top of the level and the bottom of the cup. So the breakout level minus the bottom of the cup. Breakout level was about 142, 145. And then the bottom of the cup was at about 135. So that equals out to be $7. So we're saying, okay, when this stock price breaks above this 145 range, we can then see an increase in additional $7, or yeah, about $7 or $10 if we're looking at 145 to 135. So with that, that would be about 155, or if it was $5, it would be 152. So we're saying it basically get back to about 152. And you can see here, it got to 152, it even got to 155 as the breakout level. So that's how you can make those your target prices. So what you would do is basically when it breaks out of here, if you want to do a call option, you could make your strike price your target price. So that 152 could be your strike price, or the 155 could be your strike price. And then from there, once it gets to that level, that's when you go ahead and get out the trade. Because once it hits that level, basically that pattern is complete. And it could be forming something different. So it won't just continue to go up forever, right? That target price is going to be when you need to get out the trade. Do I have any questions? Anyone need anything clarified? Okay, perfect. And if you wanted to look at an in-depth video or article, if you want to read an article about the cup and handle, Investopedia is always the best place to look at any type of research dealing with investing. So you can type in cup and handle in Investopedia and it'll bring up an article, and I can even post that article inside the chat. If you wanted to read it on your own, I just posted it in the chat. And I can also pin it looks like. So if you want to read on your own, I posted it inside the chat. And then again, it's just going to give you a detailed description of the cup and handle pattern. It'll tell you different ways you can trade it, who derived it, and the success rate for it. And yeah, if you don't have any questions, I'll pass it back off to Ladarius.
All right, I appreciate that, Mark. All righty, this is a great session. We covered a lot. Let me stop the recording so that I can start processing.